All right, hello, and welcome back to the Broken Business Models podcast. We're your hosts, Ryan and James. And before we get into today's podcast, just a quick disclaimer: none of the things that we talk about on this podcast should be taken as investment advice. James or I could have positions in any of the stocks we may mention, and so make sure to always do your own research and consult with a professional before making any investment decision. So with that being said, the topic of today's video is going to be Public Square Holdings. Now, we've actually made a video on Public Square Holdings a long time ago where we talked about how the business model is very, very poor. They're losing tons of money and the company was likely heading towards zero. Since then, the stock price has gone down from its initial SPAC price of $10 all the way down to $2. But just yesterday, as of the time of recording this video, they were making headlines on all the financial news outlets, and the stock actually almost quadrupled in a single day. And so James, what exactly is going on with Public Square Holdings, and why did their stock price go up so much yesterday?
Yeah, so the reason why the stock price surged so much was purely because they announced that Donald Trump Jr. has joined the board of directors of the company. So this has created a lot of excitement. I know if you've been paying attention to the stock market since the election a few weeks ago, pretty much any company that is perceived to be related to Trump or somehow benefiting from Trump has seen its stock price surge. And there's kind of been this investor euphoria and excitement around perceived Trump-related companies. Well, Public Square Holdings, obviously by hiring Donald Trump Jr., which is President Trump's son, that's how they are kind of being now associated as a Trump-related company, and that's why their stock price is surging. Now, if you're a longtime viewer of the channel, you might remember that about a year ago, shortly after Public Square went public via a SPAC, we made a video about it where we discussed the business of it. We discussed their business model, and we concluded that the business is almost certainly going to fail. So if you're not familiar with Public Square, they operate an app and where right-wing or patriotic, small businesses or business people can make a profile of their business that's can be seen on the app. Then patriotic-minded or right-wing consumers can go onto the app and find like-minded businesses that they can patronize. That's the idea of it. And Public Square generates revenue through advertising. It's free. Any small business owner who agrees to their patriotic values can make an account and post their business on Public Square. But you can pay Public Square to advertise, to promote and get your business listed kind of at the top of the list and make it more accessible to Public Square's user base. Now, at the time, you can go back and watch our video from a year ago, we thought that Public Square is almost certainly doomed to fail for two main reasons. First of all, the idea of having a right-wing social media app to find businesses in your area is probably not a huge market. It's a very niche market because the vast majority of people, even if you have right-wing political views, even if you are a Trump supporter, chances are you don't really care about what business you go to a restaurant, you go shop, go to Walmart and shop and buy something. Chances are you don't even care if the company that made the product that you're buying is, shares your values. You're just buying something. Like, who cares, right? Now, maybe some small percentage of people actually do take this seriously and only want to shop at right-wing and patriotic-minded small businesses. Well, if that's the case, they're going to find themselves in a situation very similar to Groupon, where if you're familiar with Groupon, Groupon used to be this huge couponing company, and but the business has declined precipitously over the past decade, and Groupon is now kind of on the brink of bankruptcy. The reason why Groupon failed is because small businesses would use Groupon to basically promote themselves and get their name out there. So Groupon's user base would discover businesses through Groupon and say you're a user of Groupon, right? And then you see, oh, a local restaurant in my area has a deal where I can get like 50% off when I use the Groupon app. So I go there once and I go to the restaurant using the Groupon promotion, and I indeed like the food there. Well, the restaurant has to pay Groupon a very significant fee to even do that Groupon promotion. So that Groupon promotion is useful for getting a new customer to get their foot in the door. But if you like that local restaurant, you're going to go there again on your own organically, even without a Groupon, even if they don't have another Groupon promotion. So the Groupon promotion, it's kind of like a one-time marketing expense that local businesses use, where they'll use Groupon once to get their name out there in the local community, but it's too expensive to actually use on an ongoing basis. And the idea is you will acquire new customers as a one-time thing with Groupon, and hopefully the customers will start returning to your business organically. Now, even if Public Square were to be, successful, as in like a lot of people are interested in using it, they're still going to run into the same problem over time, where businesses might pay in the short term, to promote themselves on Public Square and to get themselves known by the local customers. But then once those customers are familiar with your business already, there's not really that much of a need to continue paying Public Square for advertising, if that makes sense. So those are the two main concerns that we had with the company. One is that we think it's a relatively niche market because not that many people actually care about the political views of the businesses that they shop at. And second of all, even if they do care, this is not going to be a long-term sustainable business because, for the same reason that Groupon failed is failing, we would expect, this company to fail as well. So those were why we were very bearish on the business fundamentally. Now, Public Square has attempted to promote itself and get more attention and get more users by sponsoring right-wing influencers. So they have very high-profile sponsorships. For example, they sponsored Tucker Carlson, and they also sponsored, as of a year ago already, they were already sponsoring Donald Trump Jr. So Donald Trump Jr. was a paid affiliate of Public Square, and he would go on social media trying to promote Public Square. So Donald Trump Jr. has been involved with this company. They've been paying him for over a year. And then just recently, they've also hired him on to become on the board of directors. Now, people like Tucker Carlson and Donald Trump Jr., these are like superstars among, right-wing influencers. Tucker Carlson, he's a former Fox News host. He has many millions and millions of followers across social media. He's a huge guy. Donald Trump Jr., obviously being the son of the president, is also a huge name. So these guys are presumably extremely expensive to hire as promoters. I'm sure it's very expensive to sponsor them. Public Square has not disclosed how much they pay to these influencers, but it's reasonable to guess that they're probably getting paid hundreds of thousands, if not millions of dollars, to be to be affiliates of Public Square. So Public Square is incurring gigantic marketing expenses to get these right-wing influencers on board. And, this massive marketing expense has resulted in huge financial losses for Public Square. And we can see here, this shows their revenue and operating losses. So their revenue has been, pretty small, but their operating losses have been huge. They lose more than $10 million every quarter. And a lot of that's because of these massive millions and millions of dollars they pay to the likes of Tucker Carlson and Donald Trump Jr. and all these people paying them to promote the product. But as we've seen, at least as of today, this investment in marketing has not really paid off because they're incurring huge losses. And the revenue that they've generated has not been enough to cover the costs. Now, the blue bars here show Public Square's revenue, and it has indeed been increasing very strongly. So back in the first quarter of 2023, it was pretty minimal, and now it's grown. They've made over $6 million in the most recent quarter. However, the recent revenue growth can largely be attributed to an acquisition that they did in March of 2024. So in March of 2024, they acquired a company called Credova in an all-stock merger that valued Credova at approximately $23 million, including some debt that they subsumed. So Credova is a buy now, pay later and fintech platform. And when Public Square acquired Credova, they claimed that Credova already was generating annualized revenue of $15.5 million and they claim that Credova was already profitable, generating $2.3 million of annualized free cash flow. So that $15.5 million of annualized revenue that they got from the Credova acquisition, that's a little under $4 million per quarter. Now, if we subtract the pro forma revenue run rate that they got from the Credova acquisition, we can subtract that to see the organic growth in the organic revenue of Public Square, which is basically what the core business of their social media platform would have generated had it not been for the Credova acquisition. We just stripped out the revenue from Credova. And if we look at that, and that is the orange bars here, and the orange bars have actually been decreasing slightly over the past year. So it appears that Public Squares, despite spending huge amounts, sponsoring Tucker Carlson and Donald Trump Jr., the core business appears to actually be shrinking, and their losses are huge. And the only way that they've grown revenue in the past 2 quarters is just with this Credova acquisition. Now, as I explained previously, Credova is a buy now, pay later / fintech company, and they focus mostly on, outdoors products. So things like, hiking, companies that make equipment for hiking and hunting and fishing and these kind of outdoor things. Now, from a strategic perspective, it probably does kind of make sense for Public Square to acquire them because Public Square is catering towards, kind of right-wing consumers, and, hunting and fishing are on average kind of, skew more heavily towards, Trump supporters and, right-wing people. So it does kind of make sense for them to acquire Credova because that's like the verticals that they're involved in. But, and they claim that they would get these massive synergies by, integrating Credova into the Public Square platform. But as of the past couple of quarters, this has not been the case, as the core business seems to actually be shrinking. And this shows Public Square's cash flow from operations. It's basically just how much cash they burn each quarter. In the most recent 2 quarters, they've burned more than $10 million each. And they acquired Credova at the end of the first quarter of 2024. They claimed that Credova is profitable already. Yet, despite that, after they acquired Credova, their cash burn actually accelerated. So, the financial situation is not improving at all for Public Square. Now, in addition to this Credova buy now, pay later thing, they are also recently, as of October, they just launched their own payment processing service, which they'll be rolling out that businesses can use. And this appears to be some sort of a online payment processor that companies can use, I guess, on their e-commerce storefronts to accept payments. And the entire rationale of Public Square making its own payment processing technology is that it can be uncancelable. So the idea is that the narrative is that the kind of, liberal, left-wing, woke merchant acquirers and payment processing companies, they will cancel and refuse to work with, patriotic or like right-wing businesses. That's the narrative, right? And then so Public Square, by making their own uncancelable payment processor, well, this is going to be attractive to these, right-wing small businesses who fear that they will be canceled by the traditional payment processors. Well, that might sound good in theory, but in reality, it is not possible to have a cancel-proof merchant acquirer because the credit card networks can still cancel you. To give one example, back in 2020, MasterCard, Visa, and Discover cut ties with Pornhub, and they basically made it so that, it used to be that people would pay porn advertisers would pay Pornhub for ads on the platform, and they would use MasterCard or Visa or Discover credit cards to pay Pornhub for the advertising. MasterCard, Visa, and Discover said, we don't want to work with Pornhub anymore, and they cut ties. So MasterCards and Visas and Discover cards were no longer able to be used to make payments to Pornhub. So it doesn't matter what your payment processor is. It doesn't matter what your merchant acquirer is. If the customers have a MasterCard or a Visa, they still can't pay you. So it is not possible to make a cancel-proof, merchants acquirer, which is what Public Square claims that it's trying to do. Another thing, this whole narrative that the kind of woke financial companies are canceling right-wing businesses is massively over-exaggerated, because if you look at the vast majority of cases of businesses that have been canceled by payment companies and financial companies, in the vast majority of the time, this is done by the payment companies to reduce the risk of legal liability, and it has nothing to do with wokeness or the woke agenda or whatever. Take the example of Pornhub. The executives at MasterCard and Visa and Discover, they don't necessarily care about porn. They don't care that people are watching porn. They're not trying to make a moral statement by doing this. The reason why they stopped working with Pornhub is because there was allegations of child abuse and such that was happening on the Pornhub platform. Now, as a payment processor, if you are doing business with a company and you are processing payments on behalf of a company and that company is engaged in illegal activities, you as the payment processor can risk legal liability from that, because you're basically being an accomplice to criminal activity. So from the perspective of Visa and MasterCard, they're looking, okay, these porn is a high risk industry because there's the potential for abuse and illegality there. And we don't want to get involved with that because we don't want to have any liability. And porn is probably a tiny percentage, 0.01% of their revenue. And it's not worth the risk, basically. And for a lot of, businesses that have been canceled, it's whatever you see, payment processor refuses to work with porn company, or payment processor refused to work with a strip club, or a gun company or whatever, or a gun retailer. Well, the reason they're doing this is not to make a political statement. The reason they're doing this is because they don't want to be involved in businesses that have a high potential of criminal activity going on, and they just don't want the risk of the liability. But this is all a moot point anyway, because the idea of making a cancel-proof merchants acquirer is not even possible, because the credit card companies can still cancel you, and there's nothing Public Square can do about that. Now, as we discussed earlier, Public Square is losing huge amounts of money, and the cash burn has been accelerating. And here we can see their cash in equivalents. So the third quarter of 2023 is the first quarter they reported following their SPAC transaction. At that time, they had $25 million of cash. They had raised this money from the SPAC. Now, the cash burn has been continuously declining as they have incurred operating losses. And this is despite the fact that both in the first quarter of 2024 and the second quarter of 2024, they raised a $10 million convertible bond that was issued to a member of the board of directors. So a member of the board of directors lent $10 million to Public Square in the first quarter. Then they lent another $10 million to Public Square in the second quarter for $20 million in total. Now, despite receiving these loans from a member of the board of directors, their cash balance has still been decreasing because they burned so much cash that they burned cash faster than $10 million per quarter. And, they're in a desperate financial situation. And this board member who's been bailing them out, I don't think they even disclosed who the board member is. They just said a board member was lending them money. Now, we don't know who this board member is, and they presumably don't have an unlimited amount of money. So Public Square needs to find other ways to fund their losses. And as of the end of the third quarter, their financial situation was truly desperate. They only had less than $5 million of cash on hand, and they burned cash at a rate of $10 million a quarter. So they only had a couple months of cash left. They were truly on the brink of bankruptcy. And then that brings us to the recent news of the announcement of Donald Trump Jr. to be joining the board of directors. Now, as soon as this was announced on December 3rd, the stock price surged massively. And, Yeah, because obviously now Public Square has become associated with the Trump family, so people view that as a positive. Then on December 4th, the very next day, after the stock price has surged, the company announces that they are going to be selling $36 million worth of stock. So they hire Donald Trump Jr. to the board of directors, probably knowing that that's going to cause a big increase in the share price. And now they're going to dump tens of millions of dollars of stock onto the market. Now, this company we think is almost certainly going to fail in the long run. Donald Trump Jr. doesn't have any particular, Donald Trump Jr. has already been working with Public Square for the past year. Him joining the board of directors, I don't see how that's going to add anything or change, the fundamentals of this business, which is declining, which is the core business is declining, excluding the Cordova acquisition. And for the reasons we discussed in our previous video, which is linked in the description below, the whole idea of this business is completely probably not going to be viable for reasons that we discussed in our previous video. And, we see the desperate financial situation and the fact that they're losing so much money. And now they're just, getting Donald Trump's, doing this basically this PR stunt of getting Donald Trump Jr. to join their board of directors just so they can sell another $36 million of stock and give themselves a few more quarters of runway. Now, we've made videos about Trump-related business ventures in the past on our main channel, Wall Street Millennial, and reading we've made videos about Truth Social and Trump's crypto projects and things like that. And in a lot of the comments of these videos, people are saying like, "Oh, you're just like a libtard because you're like against Trump," but it doesn't matter, what your political views are. You could agree with all of Trump's, policies and have voted for Trump, but when you're going to make decisions about what you're going to invest in with your money, that's a completely different decision. So you might be 100% a Trump supporter, but you should still be able to see that all of Trump's businesses, this Public Square thing, the Truth Social, his crypto project, are all basically idiotic business ventures that are almost certainly going to fail and are basically just cash grabs for the Trump family. And you have to separate that from whatever your political views are related to Trump. The two, your political views and your investment decisions, they should not mix at all. So you have to be just objective and look at the business as it is, like the fundamentals of the business and whether or not it's going to be successful and whether or not it's going to be viable, and not just say, "Oh, because Donald Trump Jr. is associated with this and I'm a Trump supporter, therefore I'm going to buy the stock." You don't want to do that. If you do that, you're going to lose, just like, just like all of his other ventures like Truth Social and his crypto project, which are all, all similar, basically just cash grabs. So with that being said, I think that's just about everything that we had to talk about Public Square today. As always, if you have any opinions or thoughts about Public Square, please let us know in the comment section below, and we will see you all on next week's video.